Microsoft and Google kill it on earnings. Here's what you need to know before the bell. Last night, of course, Microsoft and Google announcing better than expected earnings. Those stocks both moving up higher this morning pre-market. Microsoft, of course, announcing a big jump in revenues, which again has been a big focus on them. Also talking about expanding stock buybacks. Apple is also expected to do the same. Of course, stock buybacks have been a big contributor to the gross advance of the market since 2011. It's made up about 40% of the advance has come from buybacks alone. And of course, that also lowers the number of shares outstanding. When we start talking about earnings per share, it also helps companies look better. But the important thing is that both with Microsoft and Google advancing this morning, that is going to lift the markets at the open. Of course, yesterday we had a fairly strong sell-off in the NASDAQ, down almost 2%. So very likely whatever rally we get today isn't going to even recover that loss. Microsoft, Google doing well. We have Meta after the bell today, Apple coming up later this week. We'll see here if the market can regain some of its structure after coming down and breaking the 20-day moving average yesterday. Importantly, we're on sell signals, of course, across the board here, not just on the NASDAQ, but also on the S&P 500, which does suggest lower prices here over the course of the next couple of weeks. One of the things that have been helping support the markets is earnings are coming in better than expected. But remember, those beats are coming in from very reduced levels of estimates from last year. So yes, companies are beating earnings, but that rate of beat and the growth of earnings is slower than it was previously. So again, this is going to give some short-term support, but I think the reality of a slower economic environment, slower earnings environment is going to continue to weigh on companies, at least here in the short term, and particularly as we get into summer. Next week, of course, also the Federal Reserve on May the 5th talking about their next rate hike. And as we get into the summer months, we're likely to see slower economic activity. Again, another concern for stocks. But it's important to remember that the NASDAQ in particular, along with the S&P 500, the top 5 stocks make up almost 20% of the market cap. So goes Microsoft, so goes Google, so goes Apple, so goes the index. With those companies reporting better earnings right now, expect to see a little bit of lift of the markets today, but that it will likely be an opportunity to take a little bit of cash off the table, rebalance risk a bit, because again, with these sell signals in place, we're likely to see some more sloppy action, weaker trading here over the next few weeks. I'm your host, Lance Roberts, and that's what you need to know before the bell.